They say your 20s are for building, your 30s for learning, but your 40s? Your 40s are for winning. This is the decade that decides whether you'll live the rest of your life chasing money or having money work for you. Because here's the truth. By your 40s, time stops being your ally and starts becoming your test. Every dollar you earn, every choice you make, every habit you keep, they compound, for better or worse. Most people coast through this decade thinking it's too late to change course. But it's not. It's the perfect time to take control, because now you've got experience, discipline, and real skin in the game. So if you're ready to stop surviving and start building lasting wealth, this is your playbook. Let's talk about the major money milestones you need to hit in your 40s before time catches up. When you hit your 40s, something shifts. You've already fought through the chaos of your 20s, the trial and error of your 30s, and now, finally, you've got some stability. A career that makes sense, maybe a home, a family, responsibilities that anchor you. But here's the twist. This stability can become your biggest trap. See, most people in their 40s start playing defense. They focus on maintaining what they have instead of growing beyond it. They tell themselves, I'll start investing later, or I'm doing fine, I just need to hold on. That's how people in their 40s end up broke in their 50s, comfortable but unprepared. Your 40s are not about playing it safe. They're about being strategic. It's the decade where you can finally align money with meaning. Let's look at two real scenarios. Example 1. Sarah, 42, earns a solid salary. She's been paying her mortgage, taking family trips, and putting a little into her 401k. Sounds good, right? But here's the problem. She's not tracking where her money actually goes. Every month she feels like she's saving, but her lifestyle creep eats up all her raises. 10 years from now, she'll be shocked by how little she's accumulated. Example 2. Marcus, 44. Similar income, same obligations. But Marcus treats his money like a business. Every euro has a job. Some for expenses, some for investments, some for freedom. He reviews his net worth quarterly, automates his savings, and invests not just in markets, but in himself. By 50, Marcus isn't richer by accident. He's richer by design. That's the mindset difference your 40s demand. It's not about working harder, it's about working smarter with what you already have. Here's the question to ask yourself. If I stopped earning today, how long could my current life last? The answer to that question will tell you if you're thriving or just surviving. So before diving into the tactical milestones, step back and reset your financial compass. Audit your habits. Define what enough truly means for you. And make sure your money is aligned with your next decade, not your last one. Because your 40s aren't a pause, they're a launch pad. And how you think about money now will shape every decision that follows. Debt in your 40s can be either your biggest weight or your strongest lever. The difference lies in how you use it. Let's be honest, by now, most people have some kind of debt. A mortgage, maybe a car loan, a few credit cards that were meant for emergencies, but slowly turned into habits. The problem isn't having debt. It's not knowing the purpose of each one. There are two kinds of debt: bad debt and smart debt. Bad debt is the one that takes from your future. High-interest credit cards, personal loans, anything that funds consumption but not creation. Smart debt, on the other hand, is the one that can build wealth. Real estate leveraged wisely, a business investment, even education that increases your earning power. Take Lisa, 41. She makes decent money, but she carries 6 credit cards with balances that never seem to shrink. She pays the minimums each month, telling herself she's managing. The truth: she's paying for past comfort with her future freedom. Now look at Daniel, also 41. He refinances his mortgage to a lower rate, uses the savings to clear high-interest debt, and invests part of the difference in index funds. Same decade, same economy, totally different outcome. Your 40s are the time to clean house financially. Here's a roadmap. List every debt, and don't round numbers. Know exactly what you owe, to whom, and at what rate. Attack the toxic ones first. Anything over 8 to 10% interest is an emergency. Consolidate or refinance if it reduces cost and accelerates payoff. Once clean, use debt strategically. Borrow only if it creates assets or cash flow. Here's the mindset shift. Debt isn't evil, ignorance is. If you understand it, it becomes a tool. If you ignore it, it becomes a trap. Ask yourself, is my debt feeding my future or stealing from it? Because in your 40s, every financial move has compound consequences. And clearing bad debt isn't just about numbers, it's about reclaiming control. Eliminate what holds you back, and suddenly, the next steps, building wealth, protecting it, and multiplying it, become 10 times easier. Before you grow your wealth, you need to protect it. Think of your financial life like a fortress. It doesn't matter how tall the towers are if the foundation is full of cracks. Your 40s are when you've got the most to lose. A home, a family, a stable income, maybe even a small investment portfolio. One unexpected event, a job loss, an illness, a market crash, can wipe out years of progress if you're not shielded. Let's start with your emergency fund. Most people treat it like an afterthought, a couple thousand sitting in a checking account. But the rule of thumb in your 40s changes. You need at least 6 months of total living expenses, ideally 9 if you've got dependents or run a business. That money is your oxygen. It keeps you calm when life hits hard. Look at Andrew, 45. When his company downsized, he had 8 months of savings ready. No panic, no rash decisions. He took time to find the right job, negotiated better, and even used part of the fund to upskill himself. Now look at Carla, same age, same income, but no safety net. 2 months after losing her job, she's using credit cards to cover groceries, and sinking deeper. One had protection, the other had hope. Only one survived financially. Then comes your insurance armor. Too many people see insurance as an expense, not a safeguard. But in your 40s, it's non-negotiable. Health insurance, life insurance, and income protection. These aren't luxuries, they're shock absorbers. A few quick truths. Health insurance keeps medical bills from derailing your finances. Life insurance ensures your family's stability if the worst happens. Disability or income protection is what keeps your lifestyle intact if you can't work. You don't need to overpay for fancy policies. You just need the right coverage ratio, enough to replace your income for several years and clear any major debts. Here's a practical step. Once a year, do a financial fire drill. Ask yourself, if I lost my income tomorrow, how many months could I stay afloat? If I faced a medical emergency, what would it truly cost me? If I weren't here next year, would my family be okay, or just hopeful? That exercise isn't meant to scare you. It's meant to remind you that real peace of mind is bought, not wished for. Protect first, then build. Because wealth without protection is just risk in disguise. By your 40s, retirement stops being a faraway dream. It becomes a math problem. The good news, you still have time to solve it. The bad news, every year you delay makes the equation harder. Let's start with the truth most people ignore. In your 40s, compound interest slows down if you don't feed it. The 20s and 30s are for momentum. The 40s are for acceleration. This is when you need to max out every advantage the system gives you: retirement accounts, employer matches, tax benefits. Take Amanda, 43. She's been contributing casually to her 401k, around 5% of her income. When she finally checked the math, she realized she was on track to retire at 70. Maybe. So she increased her contributions to the max, automated her investments, and diversified into index funds and REITs. Within 5 years, her retirement outlook jumped from barely enough to financially independent. Compare that to Tom, 46, who says he'll start saving more later. Later never comes. Inflation eats his cash, promotions raise his expenses, and his future self inherits the regret. Here's a mindset shift. Your 40s aren't about catching up, they're about scaling up. You've already built earning power. Now you need to make your money work harder than you do. Here's a 3-part plan. Max out your retirement accounts. Whether it's a 401k, IRA, or pension plan, push your contributions to the legal limit. If your employer matches, that's free money. Don't leave it on the table. Build passive engines. Think real estate, dividend stocks, online businesses, anything that generates income without trading your time. Start small, automate, and reinvest profits. Diversify across risk levels. In your 40s, you need balance. Enough growth to beat inflation, enough safety to sleep at night. Here's an example that hits hard. If you invest just $1,000 a month at an average 7% return starting at 40, by 60 you'll have around $500,000. If you start at 45, you'll end up with $340,000. Waiting 5 years costs you $160,000. Not in effort, but in lost time. That's the real enemy now. Not risk, not taxes, but delay. Your goal in this decade isn't just to retire someday. It's to create financial engines that run without you. Engines that buy you time, freedom, and options. Because real wealth isn't about quitting work, it's about reaching the point where work becomes a choice, not an obligation. By the time you reach your 40s, money stops being just about you. It becomes about what and who comes after you. You've built experience, stability, maybe even some assets. Now comes the deeper question. What's all this for? Because true wealth isn't measured by your net worth, it's measured by your impact. Let's start with your family legacy. If you have kids, this is the decade to teach them what you wish someone had taught you. Financial literacy isn't a school subject, it's a survival skill. Show them how money works, how to budget, how to invest early. Every euro they learn to handle now is a mistake they won't make later. Take Michael, 47. Instead of just saving for his daughter's college, he involves her in the process. She tracks expenses, learns about compounding, and even picks a few stocks with her dad. By 18, she's not just educated, she's financially confident. Now compare that to Laura, 45, who handles everything herself. Her kids grow up thinking money is complicated and stressful because they never saw it discussed openly. One builds generational strength, the other repeats generational silence. Then there's your long-term legacy, your estate, your will, your charitable impact. Most people avoid these topics because they sound morbid. But planning your legacy isn't about death, it's about direction. Here's how to start. Create or update your will. Decide who inherits what, and make sure it reflects your current life, not your past one. Set up beneficiaries on all financial accounts, retirement funds, insurance, investments. Don't let bureaucracy decide your family's future. Explore giving. Whether it's donations, scholarships, or community projects, channel part of your wealth into something that outlives you. Think about this. If you disappeared tomorrow, would your money keep working for the people and causes you care about, or just get stuck in paperwork and taxes? Your 40s are the time to turn success into significance. To make sure your wealth doesn't just end with you, but starts something beyond you. Because in the end, legacy isn't about leaving money behind. It's about leaving meaning behind. Your 40s aren't the end of the road, they're the turning point. The decade where you stop reacting to money and start directing it. You've seen what happens when people drift through life without a plan. Constant stress, limited options, and dreams that quietly shrink over time. But you've also seen the opposite. People who take ownership, who treat money as a tool instead of a master. And they don't just survive their 40s, they build empires from them. Let's recap the truth. You've mastered the mindset, shifting from comfort to control. You've cleaned out toxic debt and turned it into strategic leverage. You've protected your foundation with savings and insurance. You've started building engines that earn while you sleep. And you've thought beyond yourself, about legacy, purpose, and impact. That's not theory. That's financial freedom in motion. But here's the key. All of this means nothing without action. Wealth isn't built by knowing what to do. It's built by doing it consistently. Even small moves, made with intent, compound into massive change over time. Think of it this way. Your 40s are like the second half of a marathon. You've done the hard miles. Now it's about pace, precision, and focus. Every decision you make now pushes you closer to a decade of true independence. One where you control your time, your choices, and your future. So ask yourself right now, what's the one step you can take today to start moving toward financial freedom? Because the freedom decade doesn't begin when you retire. It begins the moment you decide to stop drifting and start designing your life. If this video helped you reframe how you see money and your 40s, give it a like, share it with someone who needs this wake-up call, and subscribe for more insights that help you build wealth with purpose.